Welcome to the video lecture on Introduction to Accounting. So our topic in today's video is about the term outstanding prepaid expenses, accrued and pre-received income, and journal entry relating to the same. So we already have discussed about the concept of expenses and income, and if you want you can refer to the link which is available in the I button at the top right hand corner. Now before we understand the journal entry of outstanding expense, let's understand what we mean by the term outstanding expense. Now outstanding expense means that you already have got the service but the amount stands due. That means in the current accounting period, in the sense for the 12 months which I'm talking about, in the current accounting period you haven't paid the amount but you already have taken the service and the amount has been left unpaid. So under such circumstances we have two account heads which we identify. One is the expense account and the second part is the outstanding expense account. Now since it's an expense, an increase of an expense, so expense account has to be debited as per the nominal rule account. Now outstanding expense on the other side is a liability because you require to pay the certain amount of money because you already have got the service, and since it's an increase in liability it has to be credited. So in case of a journal entry for an outstanding expense, the respective expense account has to be debited whereas the outstanding expense account required to be credited. Let's understand this with the help of an example. That the outstanding rent remains due with respect to the current accounting period. Now here as per our example we have taken 1st January 2019 to 31st of December 2019 as my accounting period. So therefore since the expense amount stands outstanding, we identify two account heads. One is rent account and the second is outstanding rent account. Rent account being debited, why? Because it's an increase in expenses. As per the nominal account, it has to be debited. Outstanding rent account is a liability because you haven't paid the rent in the current accounting period. And that is the reason it's an increase in liability, it's credited. Now, say for example, in the next accounting period on 10th of January 2020, you paid or settled the outstanding expenses. So if you have paid the amount, so we identify two account heads. One is outstanding rent account and say for example cash account or else bank account. Now since you have paid outstanding rent, your current liability decreases because outstanding rent was a liability, but since you are paying outstanding rent as of now, your liability decreases, and if you remember as per the debit rules, increase of an asset or a decrease of liability will be debited. Similarly, if you are paying via cash, your cash balance in your pocket goes down or goes out, and as per the real account rule it has to be credited. Thus, outstanding rent account has to be debited and cash account has to be credited. Let's move on to the next example relating to prepaid expenses. So what was prepaid expenses? Prepaid expenses means that you already have paid the amount of money but service stands due. So prepaid expense is a type of an asset because you already have paid the certain amount of money but service stands due. So under such circumstances there can be two possible ways. One, the first, where you already have paid the amount of money, so you require to pass an journal entry relating to the same. Secondly, since you have prepaid the expense is related to the next accounting year which you have paid before in the current accounting year, which should not be a part of the current accounting year but should be the part of the next accounting year. So we require an adjustment. So when you have paid the prepaid expense in the current accounting period, we passed prepaid expense account debit and cash account is credit because prepaid expense is an asset, an increase of an asset will be debited. Similarly, you have paid cash going out from your pocket as per real account rule has to be credited. Now we also require to make an adjustment because prepaid expense which you have paid is not related, this expense amount is not related to the current accounting period because it's related to the next accounting period which you have prepaid in the current accounting period. So we require to reduce the asset, and in order to reduce the asset you can understand the prepaid expense, if you decrease asset it will be credited, and you require to increase your expense account, and increase of an expense account required to be debited as per the nominal account rule. Thus, expense required to be debited and prepaid expense required to be credited as a part of the adjustment. Let's understand this with reference to an example. Prepaid rent of rupees 50,000. So in the current accounting period, once you have prepaid this particular rent, so prepaid rent is an asset, is debited, and cash going out from your pocket is credited as a part of the payment which has been done. Now when we require to adjust these prepaid expenses, we require to reduce this asset because it's not related to the current accounting period. So prepaid rent gets credited and rent account gets debited because it's an increase of expenses as a part of nominal account. Thus, rent account has to be debited and prepaid rent account has to be credited. Let's understand the next concept related to journal entry for accrued income. Now what was accrued income? Accrued income refers to that you still haven't received the income but you already have given the service. So you haven't received the income in your current accounting period. But the income is related to the current accounting period. You are yet to receive the income. So accrued income is basically an asset because you are supposed to receive a certain amount of money as income because you have given certain services. So we identify here two account heads. One is accrued income, another is the income account. Now accrued income being a part of an asset, increase of an asset has to be debited. And income being increase in income, part of nominal account has to be credited. Let's understand this with reference to an example. Accrued rent of rupees 50,000. So we are supposed to receive rent as a part of our income for rupees 50,000. Now since we are saying that in the current accounting period you haven't received, that is from the 1st of Jan 2019 to 31st of December 2019, the rent has been earned as a part of your income but you haven't received. And the second part is that you have received the rent in the next accounting period. So as on say 31st December 2019, rent earned but yet not received. Accrued rent being a part of an asset will be debited. And rent account being a part of income and as part of nominal account has to be credited. Now on say 10th of January 2020, you have received the cash in lieu of the accrued rent amount. Now accrued rent which you previously has debited because it was an asset, right now you require to decrease or adjust that particular asset. So it has to be credited. And you are receiving cash or by a check. So either cash or bank account being a part of real account, it's coming in has to be debited. Thus, cash account to be debited and accrued rent account to be credited. Let's understand the last concept, income received in advance. Now this can also be termed as a pre-received income or else unearned income. Now what is pre-received income? That you already have taken the money, you already have got the income, but the service stands due. And that is the reason why it has been said as unearned. That you haven't earned it yet. You already have got the money might be, but you still haven't given the service. Now this pre-received income is your liability because you require to give service, otherwise you require to return the money. So thus we identify two account heads, one is the income account, another is the pre-received income account or income received in advance account. You can say anything. So income received in advance or pre-received income is a liability, will be credited. And since you still haven't received the income, so it will be debited because it's a decrease in income. You haven't received the income. It's a decrease in income. Therefore, income account is debited and pre-received income account is credited. Let's understand with reference to an example. Pre-received rent of rupees 50,000. So you already have received the rent of rupees 50,000 and you haven't given the service yet. So when you have pre-received the income, we identify two account heads, cash account and rent received account. So you already have received the money, so cash account will be debited because it's coming in. And on the other side, pre-received income being a part of liability has to be credited. Now secondly, you require to make an adjustment because the income which you have received is not of the current accounting period. Therefore, rent received required to be adjusted. So previously you have credited, so you require to debit it because it's a decrease in liability. And you require to credit pre-received income account. Thus, rent received account is debited and pre-received rent is credited. I hope you have understood the basic concepts relating to outstanding expense, prepaid expense, accrued income and pre-received income. Till then, thank you. Have a nice day.